Welcome to Money Ocean, the channel where we dive deep into everything about finance, making money, and the stories of successful people. If you're looking to navigate the vast sea of financial opportunities and learn how to grow your wealth, you're in the right place. In today's episode, we're focusing on one of the fastest ways to become a profitable trader. Whether you're just starting out or looking to refine your strategy, stay tuned to learn how you can achieve trading success quickly and effectively. When starting out in trading, you can take one of the two approaches. However, only one of these approaches leads to long-term success. Let's look at two different traders, Lewis and Stewart. Lewis is eager to start trading because he sees the potential to make $500 every day. He dives right in, eager to make quick money. Stewart, on the other hand, takes a more cautious approach. He begins with a demo account to build his skills, understand the market, and minimize risk since he knows he's just starting and might make mistakes. A year later, Lewis has stopped trading altogether. He lost all his money because he rushed in without a solid understanding of the market. He can consistently make money because he tried to run before he could walk. Meanwhile, Stewart is now making money consistently. His focus on learning the fundamentals and the process paid off. Stewart's approach, centered on minimizing losses and understanding the market, is what made him successful. In trading, success is not just about how much you can earn, but also how little you can lose when you start. This is crucial. By focusing on minimizing losses, you can survive the learning phase and eventually become profitable. When you first start trading, you might overwhelm yourself with complex markets and assets, thinking that this is the best way to trade. However, this approach can overcomplicate your trading process. Holding trades overnight and over weekends adds a lot of stress and leaves you with no time to relax. Eventually, you may find that trading futures suits you better because it aligns with your goals and lifestyle. Trading is very adaptable. Don't try to force yourself to fit into a specific strategy that doesn't match your schedule or style. Find something that works for you. Over the years, I have learned that simple chart analysis without relying on indicators is what works best for me. Many people claim they have indicators that can tell you exactly when to buy and sell. But that's not reliable. The key is to learn to read charts and understand support and opposition. Support and resistance are concepts most successful traders use. They are not glamorous, but they are very effective. Think of the market in terms of supply and demand. When the market is declining, there are more sellers than buyers. When it moves up, more people want to buy than sell. For example, if the market rejects a certain area multiple times, that's a resistance zone. Instead of drawing a precise line, use a zone to indicate resistance because the market doesn't always reverse at the exact price. The same applies to support zones, where the market bounces multiple times. This approach helps you better understand market movements and make more informed trades. Building a simple trading strategy. Let's focus on this one. Once you understand chart reading, the next step is to build a simple strategy. A strategy should be easy to follow, because if it's too complicated, you'll find it hard to execute trades. Here's a framework for a basic strategy. Number 1. Overall goal. Define what you want to achieve each trading day. Number 2. Trading patterns. Identify patterns you constantly look for. Avoid random moves that aren't part of your plan. Number 3. Key trend rules. Understand that strong trends are less likely to reverse quickly. This helps avoid trying to catch a falling knife. Number 4. Trade entry checklist. Create a checklist to take emotions out of trading. This aids in maintaining your strategy and preventing nervousness from influencing you. Number 5. Trade management. Decide on your risk per trade, account size, and risk to reward ratio. A more fluid management style with a trailing stop can be effective. Many people claim to have a 90% win rate strategy, but these usually come with a poor risk to reward ratio. For example, risking $400 to make $100 might give you a high win rate, but 1 or 2 losses can wipe out your profits. This approach puts immense pressure on each trade to be a winner. Instead, aim for a more favorable risk-to-reward ratio. A 1:1 risk-to-reward ratio is more balanced. Even better is a 1:3 risk-to-reward ratio, where you risk $400 to make $1,200. This allows you to lose more trades than you win and still be profitable in the long run. After building your trading plan, stick to it for at least 20 to 30 trades before making any changes. Trading is about long-term success, not immediate results. Many traders fail because they constantly change their strategy after a few losses. This leads to a never-ending learning loop without real progress. Tracking your trades is essential. Successful traders focus on the process, not just the results. Journaling software such as TraderSync can help you import trades, add comments, and analyze your performance. It's not free, but it's worth the investment to improve your trading over time. Once you have consistent success in demo trading, it's time to switch to real money. Start with a small amount to avoid the emotional impact of losing real money. The transition from demo to real money often triggers emotional responses that can affect your trading. If you lose confidence, switch back to demo trading to revalidate your strategy. When trading real money, be aware of how your emotions affect your trade. Track your emotional state in your journal. Were you nervous? Did you pursue the trade? Did fear cause you to exit early? Understanding these factors will help you improve and become a more disciplined trader. Trading requires continuous learning and adaptation. Watch tutorials, read books, and learn from other successful traders. Stay updated with market trends and news that can affect your trading strategy. Becoming a profitable trader quickly involves focusing on the fundamentals, understanding market movements, and building a simple yet effective strategy. Track your trades, manage your risk-to-reward ratio, and be mindful of your emotions. With patience and discipline, you can achieve consistent success in trading. Thanks for joining us on this episode of Money Ocean. We hope you found our tips on becoming a profitable trader both informative and inspiring. Remember, the journey to financial success is like navigating an ocean, full of opportunities if you know where to look. Don't forget to subscribe to our channel for more insights on finance, making money, and learning from most successful people in the industry. Until next time, keep exploring the waves of wealth with Money Ocean.